My clients just sold this Santa Clara duplex and saved hundreds of thousands in capital gains. Hi, I'm Vinicius Brazil with the Brazil Group and Keller Williams, and I've been helping people buy and sell real estate for over 20 years here in the Bay Area. Today, I want to share a story about how my clients were able to sell their investment property and gain a secure and steady stream of income while lowering their tax liability. My clients had owned this property for over 40 years and it had been a great investment for them. But over the years, the home needed more and more repairs, and in order to attract good tenants, the property was in need of some serious renovations. On top of that, my clients were getting older, and the idea of sinking tens of thousands of dollars just to get a few more $100s in rent didn't make financial sense, and even if it did, they didn't want to deal with the hassle. The main challenge my clients faced was that the home had appreciated significantly, and they would have owed close to $400,000 in capital gains for state and federal taxes. My clients didn't want to do a 1031 exchange because they didn't want to deal with another rental property. And the idea of a DST, or a Delaware Statutory Trust, didn't appeal to them either. The best option for my clients was a structured installment sale, which would allow them to be paid in future installments over a period of time rather than one lump sum. Because taxes are based on income that's received each year, this structure allows sellers to defer their capital gains tax and pay a significantly lower rate and decrease the overall tax liability on the sale. Also, the amount that would be deferred would be accruing a return. Now, I'm not licensed for investments, so I can't quote any rates here, but since cap rates or the rental return in the Bay Area is not very high, the amount that my clients would be earning on the amount that they deferred would be higher than what they were earning on their rental property. This results in a tax-smart stream of guaranteed income and no more headaches and risks of owning an investment property. Here's an example of how it works. A couple decides to sell a home. It can be a personal property or an investment property, which also makes this a great option since 1031 exchanges can only be used for investment properties. After putting the home on the market, the sellers get an offer for $2.5 million. After factoring the seller's exemption and the original basis, it's determined that the sellers would have a $1.5 million gain and be subject to capital gains taxes of about $400,000 for state and federal governments. In this scenario, the seller would be paying a rate close to 40% for capital gains. In this example, the property is the seller's primary residence, so it doesn't qualify for a 1031 exchange, but the seller can do an installment sale where the seller will receive the proceeds in yearly installment payments as opposed to one lump sum. Under one lump sum, the sellers would be subject to a $400,000 tax payment in the following year, as opposed to deferring and paying much lower taxes over the course of 10 years. Another great thing with the installment sale is the sellers can take out the $500,000 that is included in their homeowner's exemption, as well as the original basis, and what is remaining can be placed in the installment sale. The seller would then receive yearly payments which could be paid out over the course of 10 or more years. By stretching out the payments over several years, the sellers will pay a much lower tax rate, and in the end, much lower capital gains. The amount of tax savings would depend on an individual's income and the amount that's dispersed every year. Now, I'm not a tax or investment advisor and therefore not qualified to give tax or investment advice. But if you're considering the sale of a property and potentially facing a large capital gain, a structured installment sale may be a great option for you. Keep in mind, a structured installment sale may not be the right solution for you if you have a large loan against the property or not enough equity, or if you need a significant amount of the proceeds after the sale to buy another property. If you're interested in learning more about how a structured settlement works, please contact me. I'd be happy to introduce you to a qualified investment advisor who can explain the benefits and answer any of your questions. Until next time, this is Vinicius Brazil with the Brazil Group and Keller Williams.